Hello and welcome to ET Now. Now at the beginning of this video, let me tell you a short story. A story about crude oil. This is Pennsylvania, USA. Here, way back in 1857, a former railroad conductor named Edwin L. Drake was hired to travel to a small town called Titusville and drill for crude oil. Almost 2 years passed by, but Drake was unsuccessful. There was no oil to be found. Drake was ridiculed by the locals, and the company which had sent him there also decided to withdraw the funding. But by then, Drake had started believing that there was oil in that area. So following his instincts, he took a personal loan of $500 and kept the operations running. And then, on August 27, 1859, at 69.5 feet below the ground, Edwin L. Drake found success. He finally found oil, which he termed as black gold. This discovery is considered the first large-scale commercial extraction of petroleum. Drake sold the first barrel of crude for a humongous price of $20 per barrel at that time. However, 2 years later, the same barrel was selling for only 52 cents. Now, this was the volatile start of crude prices, and since then, history has only kept repeating itself. Like in March 2022, crude prices reached the highest figure since 2008 at about $139 per barrel. But then again, in September 2022, 7 months later, the prices of crude came down 30% from the peak. But do you know that these falling crude prices can actually be good for Indian stock markets? No, I'm not talking about the sudden drop or drastic drop in crude prices which one saw during the start of COVID in 2020 when the demand collapsed because of lockdowns and there was a drastic decline in industrial activity. But the falling crude prices are important in an Indian context because India imports around 85% of its crude requirements. Globally, there are two main crude types. One is West Texas Intermediate or WTI, which is mainly found in the proximity of the US, Canada and Mexico, and is the key benchmark especially for the American markets. The other one, of course, is Brent crude, which is mainly found in the vicinity of the North Sea and is used as a global benchmark. But for India, the Indian crude basket is the key indicator, which is the weighted average of Dubai, Oman and Brent crude oil prices. As the majority of India's oil imports predominantly come from the OPEC countries. Therefore, a fall in the Indian crude basket will have a positive impact on India's current account deficit. Lowering the current account deficit will mean reduced stress on foreign currency outflows, thus stabilizing the Indian rupee. Moreover, a drop in crude oil prices also helps keep inflation in check, thus having a positive impact on consumer spending and finally resulting in a positive bottom line for the companies which markets love the most. Furthermore, if we look at sectors that could be positively impacted by the drop, then it could be any company that uses oil or its derivatives as their key raw material. For example, in sectors like paints and tires, crude and crude derivatives account for around 35 to 50% of their raw material costs. So they could surely save some money with the drop in crude prices. And then of course there is aviation and the logistics sector, where the companies could benefit as their fuel costs come down. Furthermore, sectors like lubricants, footwear, refineries and even adhesives all gain from falling crude prices. While a drop in crude prices can also result in a reduction in the price of petrol and diesel, which positively impacts the conventional automobile industry and could result in higher demand for cars and two-wheelers. So in simple words, it's very important to keep a track of oil prices as its history is filled with ups and downs and will continue to be so even in the future. But as an investor, being informed about its impact on markets and stocks can be the key to achieve success in the financial markets.